there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have John-Mark Staude, President and CEO for Riverside Resources with us today. Hey, John-Mark, how you doing?
Keir, great to be on your show and talk stocks. Wonderful.
Well, today we're going to do a bit of both. We're going to do talk stocks and we're going to talk some rocks. So I'm looking forward to that. I know years ago when I was looking to learn some basic geology, there was a gentleman who had a pretty hot YouTube himself putting out some episodes. That was you, probably 15 or 20 years ago. And anyways, really nice to get you on so we can talk about some of these things. Maybe before we kind of dive into who you are and what we have going on, maybe we can just do a quick sort of 60-second pitch here on Riverside. So first question, what is the name and stock ticker of your company?
Riverside Resources, RRI on the venture, and RVSDF on the OTCQB.
What is the mission and vision of the company?
Making money for shareholders and for stakeholders. The way we do that is through prospect generation in multi-commodities and multi-jurisdictions.
How many shares are outstanding?
75 million shares out with no warrants at all.
What is the insider ownership percentage and how much capital have you invested?
Riverside ownership is about 10% as the management team. I participated in every financing. Never sold a share in 17 years. Invested well over $800,000, $1 million into the company. I've put a lot of money in and glad to be a big owner.
Are you fully funded for 2024?
Riverside's fully funded very well. We have over $6 million cash, no debt, no warrants, no overhang. We've been able to spend about $1 to $1.5 million a year. So that would put us in a runway for at least 4 to 5 years. We're in a good position, yes.
What are your short-term catalysts?
For us, exploration catalysts, working with Fortuna Silver on a high-grade silver gold project in Mexico. A second is the potential spin-out and transaction around Ontario, where we have very large gold portfolio. A third is on copper. We have porphyry coppers in Mexico, very much having fun on that. And the last is actually on rare earth elements and gold in British Columbia. So we have 4 different catalysts in the next 12 months.
What is your market cap today?
Tiny. Our market cap is 12 million Canadian.
Excellent. Hey, thanks for giving us a rundown. Can you maybe explain a bit to our viewers about who you are and how did you get to where you are today?
Well, I'm really lucky. I fell into geology as a young person and did an undergraduate. I'm now the CEO of Riverside, a company that I founded 17 years ago. Between graduation, I worked in mining companies and major companies like Rio Tinto, BHP, had a chance to be involved in discoveries that became mines like Oyu where Ivanhoe works, or big projects like Escondida mine in Chile. I lived and worked in many different countries and delight to now be based in Canada, where I'm now a Canadian citizen. And as Riverside, we've had the chance to work with 6 strategic alliances with major companies, do 84 projects over the last 17 years, and never roll back the stock. I've been able to move it ahead with 75 million shares out of Riverside today.
Wow, that's quite a testament. Everybody's always concerned about dilution, and you've really controlled yours. So congrats there. So how did you decide you wanted to get into mining or geology in the first place?
I'm really about making a difference in people's lives, making a difference where we could go. And as a high school student, I went and lived in Argentina, learned to speak Spanish, and have applied that. So for Riverside, we applied knowledge is golden. Knowledge of our community, knowledge of where we are, and finding materials that we can convert into mines has been a key focus of my career and a passion for Riverside. It's great. We have royalties on many different projects in many jurisdictions, and that's really what I love doing, is developing projects and progressing them with partners.
What are some memorable experiences in mining and geology for you?
Well,
Do you
they're
have
good
one or
and
two?
bad both, you know? You have some good experiences, but you have some bad ones too. And often those bad ones stick with you much longer. One of them was actually on September 11th. And, when things were happening and it was very bad, I was on an airplane flying through Beijing. And I turned on the television and I saw this movie, which was actually on CNN, of these towers falling down. And I thought this was a really wild movie until I realized it was real. And I was on the way to Oyu, which is in the middle of Mongolia. And so I just kept going. I figured there's no better place than to be out in the Gobi Desert during when all the things were going to stop and I could continue to work for the next 2 weeks. Other wild experiences have been in traveling in different countries, living in South America, and going and visiting mines. I remember one time we drove out to the mine, and when we came back, the road was blockaded. The locals didn't want us out there, and so we had to negotiate to get out again. And this was actually quite important, is making sure that when you go in, you can get out. So that was a good learning when we were in Peru one time. Had lots of experiences and really enjoy the adventure that we get sometimes.
Hey, excellent. Well, thank you for sharing some of those and explain a bit about who you are. One of the reasons why I wanted to have you on, as we said at the beginning, is a little investor geology 101. It's amazing. We have cycles in this sort of industry where themes come in and out of favor, and I think we've been in sort of a stealthy sort of bull market for a little while here with some of the metals companies having performed quite well, and we're getting some newer, younger, or just newer people that aren't necessarily as experienced, sort of investing into some of this stuff. And on the technical side, it's important to have a little bit of a basic geological sort of knowledge, so that you don't sort of get taken in this industry. So, anyways, I was wondering if we could just kind of talk. Instead of it being a pure stock talk, we'll do a little rock talk with you, and maybe on mineralogy. Why don't we start there? What's kind of important to consider on the mineralogy of potential ore?
Two key things. One is the mineral chemistry, and so different elements that are in minerals. So minerals make up rock. So rock is actually a collection of minerals, and minerals are made up of elements that are put together in the form of different structures. So oxide, things that are within oxidation, can easily be leached, and that fits with metallurgy, which is the extractability. So as an investor, can this easily be extracted, and is it going to have impurities or bad things with it? Those are the key things from mineralogy. So mineralogy of oxides or sulfides, is it easy to extract or is it hard to extract? And so when I look at a report, I look at what are the minerals that are described and then think, are those minerals pure elements or are they compound minerals? And then if they're compound minerals, is it complex? In other words, hard to get out, or is it easy? Is it oxide and going to be easily leached or easily processed? And then that fits with the capital, because as the mineralogy changes, the amount of capital you need to extract it changes. So mineralogy is a fundamental part of decisions about what is the viability of a project. Good question.
So another one that's kind of a common place where to really kind of understand would be, when companies announce drilling assay results. So when you're looking at a news release and a company announces their drill assays, what are some key pieces of information that you want to be thinking about when you're reading that?
Yeah, I think three key things. One is how rich, so what is the grade number, but over how thick. So how many meters? So not simply a grade, but also a number. And how equally is it distributed over those meters? So it isn't just one spiky spot or two spiky spots that then may be spread or smeared between them, but instead, what's the continuity of that similar grade over a thickness? And the third part is how deep. Is that shallow or deep? Because if it's deep, it's going to be expensive to do more testing and definitely expensive and take a long time to get out of the ground. So the depth of that intercept. However, I'm very careful if the intercept is right at the surface, because that actually is perhaps something that's already known and you're drilling into something already. So when you're looking below 50 meters onward to 250 meters is a good depth. and looking for a thickness of equivalent of around 30 to 40 meters thick. Those are a good width. And then the value of what's the value of the primary metal that you're looking for, and looking at that value of what that assay is. Fun question.
Maybe you could just go over the people talk about smearing of results and grades all the time. Maybe you could just kind of go over that one more time. What does that exactly sort of mean, and how do you watch for that?
So I think you look at, and often they'll talk about in a press release of an interval also have the word including. So it'll say including a certain grade, and usually if that grade is 2 to 4 times or much more, call it 10 times higher than the average of your interval. So if your average interval is 1 gram of gold, for example, but one spot has 10 grams, then it could be smeared as looking as 10 meters of 1 gram, but is actually 1 meter of 10 grams. So when you see people have long intercepts, look and seeing how thick and do they have those includings and what's happening, because smearing would be where you have just a few high grades and you've extended that over a long thickness to therefore interpret that you have a very wide gram thickness or grade thickness interval, but in fact you don't. You have spiky little spots of grade. So that's very important when you look at an assay or look at a report.
So what are sort of typically kind of considered good grades? Maybe you could break it down like gold or silver or copper. Sometimes there's a discussion on like gram meters, grades times your meterage. Could you give like a little bit of an understanding of like what would be kind of considered good?
Definitely. So when we look in gold, for example, and so gold, part of it's going to be on the metallurgy of how you can extract it. But for a gold assay, 100 gram meters, in other words, the number of meters over the times the number of grams. So if we have 10 grams for 10 meters, that would be 10 times 10, or 100 gram meters. And those are rare. So when you find those, you're really happy. If you go to half of that, 50 gram meters, that's good. So when you're hitting 50 gram meters, you're into the game and you're really starting to do well. And so if you're having 10 meters of 5 grams, then that's good. If you only have 1 meter, then it's quite difficult because it's not thick enough to mine and it's not significant. But if you make it over too many meters, then it's just too low grade and not significant. So you need to have something around a cutoff grade as well. So if you look at a cutoff grade in general for gold, it'll depend partly on the mineralogy and partly on the depth. If you're near the surface and you can do open pit, then a cutoff grade of 0.5 gram or 1 gram is good, and you can have an average grade of 1 gram or 3 grams. That's excellent. Again, depending on the mineralogy and the extractability. So when you look at gram meters of gold, 50 is good, 100 is really, really good. Above it, you're really going great. If you look at other commodities, for example, copper, make it 1%. And if you have 1% copper, that's excellent. If you want to do it grade percent, 100 meters at 1% copper would be very good. If you actually have only 0.5% copper, that's still good, particularly on mineralogy and to style of deposit. But also, what's the volume then? What's the overall scale of the project and how big can the project be? So when you look at a single assay, it's a good start, but it's helpful to take it in context. So good companies will often show it with a cross section. Often on the website, we'll have a 3-dimensional image or a cross section, or at least a map of showing where is that hole and where is it relative to other holes. Often drill holes are drilled very close to the others. Sometimes that's called twinning. But often it can be very close and not called a twin, but actually is functionally almost a twin. So you have to be very careful when you look at assay results and see what other drill holes in the vicinity have also been drilled. And so is this new information truly new, or is it largely a repetition of existing information? That helps the investor, the general person reading a news release, going to the website or looking at the cross-section that they show.
And just again, cross-section sort of shows a physical cross section of the hole, and it usually breaks it down in terms of the result on a sort of per meter sort of basis, and you can see kind of the representation of how the mineralization appears over that sort of width. Is that correct?
Yeah, I often think of it like a wedding cake, and you slice through the wedding cake, and as you look through it, so you have partly that's frosting, and part of it some of the different goodies inside the cake, and then of course the cake itself. And so yeah, so it's a slice through it, correct? It's what are the values as you go through on a certain meter basis, and what's the geology. And so the investor should be able to see a picture of how does the drill result and the drill intercept fit within the overall geological context, and therefore see an interpretation, because it's an interpretation. All we have as a fact is the single drill hole, kind of like a straw into a thick malt smoothie or something. So, you only get a single sense of what it is. You don't get the full sense of everything, but it cuts through it and you get a chance to see what sample of it is been done. So that's a way that we use drill holes and cross sections. You described it well.
And just something to sort of elaborate a little further on. There's different types of drilling techniques, right? There's like reverse circulation drilling and diamond core drilling. Could you maybe explain the difference in what you get from those two drilling techniques?
Definitely. And on YouTube, there's information, including my geo tutorials under John-Mark's geo tutorials. And what you see is reverse circulation is using an air blast system where you're pushing air down, and has a hammer in the bottom of the hole that's drilling and chopping up the rock. So you're getting little chips. So as you get chips coming up, it's not 100% exactly what the rock is, but it's little chips that are somewhat mixed up as they come out. Not broadly mixed out, just generally mixed up. Also material from the side is much faster and cheaper to do reverse circulation, and a larger area. It's a 4 inches diameter across that. So it's a larger size of sample versus drill core. And drill core, we can go from different scales, from larger scale of a PQ to an HQ to an NQ, down in size as we go down. And as you go, you get a different diameter, but the core, you get the entire rock. And so as you get the entire rock in the core, it's really good for telling the structure, telling what's happening. It costs more money and is slower, it takes longer, so it's more expensive to do. So those are the two main type of drilling that we do: diamond core and reverse circulation.
What's better?
It depends on the problem. For example, we're drilling right now with the company Capitan Silver, where I'm the chairman, and we've been using reverse circulation. It's better in this case because we can drill a lot more. We've gotten a lot more meters, and we've been able to get a good sense for the metallurgy of what's happening. But on other projects where Riverside's drilling in Ontario, for example, we really want to understand the structure. So we're using diamond core. We really want to know the tightness of our intercepts, and we want to make sure that it's not spread out. As reverse circulation, we're only sampling on every 5 feet or every 2 meter size, so you don't get the sense of what's really happening in detail, and we want that fine detail, so the core is better. Often drill core is used to really know the geology and tell what's going on, and reverse circulation or air blast is used for production, used for rapid, cost effective, and used for figuring out the scale of a deposit if you don't need all the defined detail initially of the core.
Right. So the diamond core would allow you to see the structure more prevalently because you're getting that entire sort of core, and it's an entire piece. So you're able to interpret structures a lot better. If you have a structure already sort of figured out, and RC drilling can just sort of tell you how big that sort of scale of that structure is. Is that correct?
Right on, Keir. Exactly. And so if you're trying to just measure out the larger scale of things, particularly a lot in Nevada, we see a lot of reverse circulation, where we also don't have problems with water, and where we can see that we can get in and actually have larger machines that can do it. If it's remote, where we have to fly a rig in, then it's so expensive. If we can get a drill core, we can use that more, and it's also easier to do man portable and transport in. So right on.
Well, why don't we switch gears a little bit? the last sort of 12 months or so, there's been a lot of mention of copper porphyry. Copper porphyry seem to be in style again. Maybe you could just give us a little bit of a explanation on what a porphyry system is.
So yeah, so we use that complicated word porphyry, and basically large homogeneous moneymaker is another simple way to talk about it. So they're large volumes of rock, usually intrusion rock. The rock has similar type of grade spread throughout a large volume. The word porphyry is a rock texture term. The texture is a rock that cooled quickly, and when it cools quickly, the fluids crack and come out very quickly as well. So as the fluids come out in veins and things like that, they can be spread over a volume, a stockwork. So you can have a nice deposit of mineralization or a nice system. So porphyry is a rock type, and the deposit is this larger volume as opposed to a vein or replaced to a replacement or a volcanogenic massive sulfide deposit. A porphyry is a very nice term for a large volume of mineralization that maybe is similar grade but spread over a large amount of rock.
So as you said, it's a little bit more like homogeneous. It'd be generally like the grade would be contained similarly across a larger volume of rock, and it can provide ease of mining. Is that correct?
Yeah, and so because it has that ease of mining, it makes it easier for the engineers because you can take a larger amount of material. It can be more mechanized, more industrial scale, and can in the end have a lot of metal. Whereas a high grade vein can require specialized mining, very tight following of it, and you have to be very precise. And so that could be more expensive to mine. So we like the porphyry for mining, and we also like it for measuring out a resource because it is over a large volume. We don't have to drill it so tightly. So with fewer holes, we can measure out a volume of mineralization and estimate how many pounds or tons of copper metal we would have, how many pounds of molybdenum or copper, how many ounces of gold we'd have more easily than if we have a vein system that's not homogeneous and therefore takes a lot of drilling and a lot of testing and a lot of statistics to figure out what's the average and what's the overall contents of metal in that vein.
So over my career of investing in this stuff, copper porphyries, sometimes they can really, or porphyry mineralization in general, can really evade a company. You hear things like buried porphyry, we didn't drill deep enough, all sorts of different things. So am I to understand that they can be more complex or more difficult to find? Maybe you could give us a little bit of a breakdown on the challenges of finding porphyries.
Yeah, I think we actually are often using techniques other than geology, or in addition to geology, often using geophysics and geochemistry. With geophysics, we're actually measuring the characteristics of the Earth and making an assumption that the anomaly or the feature that we're looking is actually related to something that we're looking for. For example, if we look for a porphyry, we're often looking relative to the background rocks, a difference. It could be looking for something that's maybe more magnetic or maybe less magnetic or more conductive. So when we then do the drilling and exploration to try to drill into that feature, and we call it a buried porphyry, meaning a porphyry that we don't see at the surface, for example, and we've modeled up, we're really looking at different remote techniques, not necessarily something that's exposed on the surface. So when we get there, it may not be a mineralized, it may not be something economic, it may not be a concentration of the metal that we're looking for. It could be some other feature that we're looking at. And so therefore the interpretation is maybe we didn't drill in the right place, or in fact we drilled in the right place but found the wrong thing. So yeah, so it's hard to look for porphyry.
Everybody wants them, but they're hard to find or costly to find. What's this? I've heard mentioned here recently of lithocap. Could you explain in technical terms that are easy to understand what is a lithocap and how is it related to a porphyry?
A lithocap is the rock over the top. Lith being the word rock, cap being on top. So in porphyries, which are this deposit type, often there's a lot of sulfur. As sulfur comes off of the system, it comes off of the system and crystallizes as sulfide. As it gets weathered, the sulfide begins to break down the rock as well, and makes a lithocap. So lithocaps in the porphyry setting are an interpretive term for the rock above a copper system or a mineralized system or an intrusive system that had sulfide. The sulfide has degraded down to now oxide, destroyed the rock and broken it down on top. And so we talk about lithocap being the rock on top of, above our target. As we get into the target, we'd be looking for either a supergene target, call it chalcocite, which be a copper sulfur, or we're looking down into the hypogene, which has not been oxidized, and that might be chalcopyrite and bornite. So lithocap is the geological term for the rocks on top that have been altered.
And do you find economic mineralization in a lithocap, or do they tend to be barren?
So generally, you don't find mineralization, or if you do, you'd find relict mineralization of mineralization that's otherwise leached, but was actually doesn't get leached. So sometimes you can have gold and molybdenum above a copper in a copper lithocap above a copper deposit. So generally, no, you don't find the element you're looking for in a lithocap. The lithocap is above, and the concept is that it has been moved down through weathering processes, the metal that you're looking for, and concentrated below the lithocap in a blanket or in a horizon below the lithocap. So we like to drill through lithocaps to find the high-grade zone below the lithocap, whereas the concentration of whatever was in the lithocap has been concentrated down, kind of like a sponge. You take your sponge and you squeeze it out, all the water is in the bottom. The sponge is barren of water. That would be your lithocap.
Great. Thank you for giving us a good explanation on that. Maybe we could move on to a term that gets thrown around all the time, armchair sort of investors, amateur analysts. It's this discussion on, hey, we're targeting tier one projects, or we're on the hunt for tier one projects. What does tier one sort of mean, and how many tiers are there?
That's great. So they're kind of 3 or 4 tiers. Tier one means the top of the top, the lowest quartile, the biggest, the best projects, the upper 10%. So as you see, I haven't given a clear definition because there isn't a clear definition of only one thing. It simply is a term that the major companies often use, and they change and they'll use other terms after this, but it simply means the very best, or the ones that get developed. So it's the top. And so when you look at an 80-20 rule, that upper 20%, or 80-20 twice, so you're looking at the top 10% of all the projects, then that would be tier one. So those are the best projects. How many tiers? Well, then there would be a tier two, which are really good projects, but not the best. And then tier three are projects that you have that are out there that are really not that good. And tier four is the rest of the stuff. So you could have, so it's kind of a pyramid, maybe even a three-dimensional pyramid. So we have just the tip of the iceberg, just that top part of the pyramid would be the tier one part of that.
Right. And so if you happen to be involved as a shareholder in a company, a junior, which has gotten a hold of a tier one, then that means that they would likely have a pretty good project that might be favorable for majors. Is that correct?
Yeah, and it's good to figure out who's declaring that it's tier one. If it's just themselves, then their valuation is probably low. If it's seen by others as tier one, then it's probably no longer owned by the junior because it's been acquired. And it takes time to figure out a project is tier one, because there's not just the commodity, but all the other aspects in terms of community, location, country, ability to extract, even the agreement that they have, the social license agreement, maybe the option agreement or purchase agreement. So there are lots of other aspects other than just grade and the size of the rock and the amount of tons. But yeah, self-declaring tier one is different than having the society and overall the community really see that it is the best of the best projects.
Well, one thing that we've sort of been seeing in a little bit more regularity are the return of corporates, the mining majors, sort of taking 19.9% stakes in sort of juniors. If they're doing that, that means that they've maybe seen some evidence that a project of a junior that they're investing in and taking a sizable stake maybe are onto sort of a tier one or tier two project. Is that correct?
Yeah, it really helps. I wouldn't necessarily say that they're on a tier one or tier two, but they're
Sure.
definitely that the major company has done their due diligence, and their due diligence, if they're writing a check, is good for you as an investor. If you see that the major companies are investing into the project or into the company for that project, it's a somewhat of a vote of confidence for that project. I would not say that it's a tier one or a tier two. I
Sure.
would say that it looks like an interesting project, and therefore it's something good that the mid tier or the majors done their due diligence and sees has a chance. It's something that might fit in the deal, the business terms that that corporation has between the company that is taking an interest in, either an equity interest or a project interest in, is in a win-win state for that company coming in.
Thanks for clarifying. Why don't we move on to another sort of interesting topic? 43101 reports. So it's National Instrument 43101, and there can be different types of reports. There can be an NI 43101 report that states an exploration project and makes recommendations on how you might explore to see if there's minerals there. And then there's also things such as like resource calculations. Sometimes those two things get a little bit sort of confused for investors. Would you mind providing a bit of an overview on what NI 43101 reports are supposed to do and the varying forms that you'd find?
Yeah, sure. I've got one right here on my desk. I'm just gonna look up. So here's one right here. So just that's what we do all the time. So this is what we're working on today. So I've got a National Instrument 43101 report, and what you're saying is correct in that there are all kinds of different types. Some of them are for pre-feasibility studies or preliminary economic assessments. Some of them are for resources and resource updates. Some of them are for the project in order for the project to have all the information about the project. It's kind of a book report put together so that the investor gets a sense for the facts. It's not supposed to be a promotional document. It's not a marketing document. It's a summary. It should have what's been done in the past. It has an organized sequence of 18 different sections through the 43101, has the location, has about the metallurgy, about the ownership, about the geology, a space, as you say, about mineral resources and about the resources with lots of room for caveats, room for geochemistry and the facts about the geochemistry. So all of those things. So it's very helpful. They're filed inside for the Canadian system on the system called CDAR, which is a filing system. And they're also often on companies' websites available. And they're a document that's made to file with the exchange so the investor can get transparency. So the investor can learn about a project. And so I find them to be kind of boring to read, but very helpful. And they also have all the different sections. So you don't have to read all the sections. You can read the ownership section, the land tenure section. You can definitely look through and look at the resource section. And it has the caveats about the metallurgy. Those are some of the key things that really help. So when I go to look at a project, I try to get that book report document, and it doesn't mean it necessarily has to have a resource, but it's a good place to get a good in-depth read and information about the project as of that time, often written by an independent qualified person. A qualified person is a professional geologist, and there's a definition that this person has gone through school, is independent, or has disclosing any type of situations where it may have any conflicts that that person writing may fit with the company or owner of the project. And so that helps the reader to look at the project with a more of an optimistic situation, and also very much to look at it with a very factual sense. And so without something being so compromised as something that's a marketing document.
Right. You mentioned metallurgy. I know oftentimes, companies very early on can do initial metallurgy. Now, I've had some issues of metallurgy when I've, invested in things, because sometimes some of the early metallurgy that's done might not be the actual economic process that might be used later. And you can run into sort of issues where maybe early on metallurgy looked like it would work, but they might have been using a process or system or the number of hours that would not be necessarily economic in a real world situation. Could you give us a bit of an understanding on what metallurgy is, how important it is?
It's vital. It's the extractability. How are the metals going to be extracted, particularly to concentrate and get the metal you're most looking for? And you're completely correct that when you're initially studying it, you could grind up the rock very finely. You have all the time. It can use the chemistry and the chemicals, and it isn't necessarily at a scale that would be a production scale. When we then look later on at the economics of a project, we're looking at a production scale, then you'd have the extraction method be different. You wouldn't grind it as fine. You wouldn't actually have to take so much time to be able to extract it. You'd actually have to look at it in a leach setting, maybe with water and other components to it as well. So you're exactly right. So the metallurgy section in a technical report is very helpful. And initially, people are trying to get just the assay of what's the value without really thinking about what is the method they're going to do. Later on, when you have a resource and you then think about how are we going to get it out, then you would look more detail at something that's practical and operational, not simply to get an assay, but what would it be to actually get something that we would actually sell as a finished product. That's, as you say, can be very different, and often there are other elements present, maybe hydrocarbons, maybe other clays, other things that are in it that make it difficult to, at an industrial scale, extract the metal you want.
Hey, thanks, John-Mark. Can you give us a bit of an overview on Riverside Resources?
Riverside's a mineral exploration company. We're based in Canada, working in Mexico, the United States, and Canada. We have projects in gold, silver, copper, and we focused a lot on projects that are big scale. So with those big scale projects, we have big partners. We've operated with major companies like BHP, Rio Tinto, and currently we're working with Fortuna Silver. Riverside as well has royalties in those three countries, and we make about $1 million a year overall in gross income.
How long you been CEO?
I founded the company 17 years ago, and it's been really good. We have a great team, really enjoy it a lot. I'm not a director, an officer, and other things, just focused on Riverside.
How'd you come up with the name?
I grew up in a city called Riverside near Los Angeles, and so it was a lot of fun. As Warren Buffett kind of said, find a CEO that's really passionate on what you're doing, and that's me. I've been very passionate about it. It's where I grew up, and it's fun to have the name of Riverside.
Driven through a few times. Beautiful place.
Awesome.
So hey, you kind of wrote the book on being a project generator. That's a whole class of mining exploration. And you guys are kind of the poster child for that. Would you mind giving a bit of an overview on what a project generator model is?
The business model is excellent to protect shareholders and to protect share structure. The business model is to go and use your ideas, data, to go and get projects, to generate them, and then find partners to work on them. In our case, we do the physical work, but with partner funding on the projects. So by doing this, we can do multiple projects in multiple jurisdictions and not go bankrupt along the way. The key thing is quality people, quality projects and quality jurisdictions. You got to make sure that you get a project that the majors that come in that do the project could see that they could build a mine. And if they see they could build a mine, then us as investors are in a great position because we know it's a project that's passed their due diligence. That's project generation.
Excellent. And what projects and JVs do you have active right now?
Right now, we're very active in Mexico, but as well, we're active in Canada. And in Mexico, we're working with the company Fortuna Silver. We're also working with some junior companies as well. We've also been able to do a major program with BHP, and that's built out a very large copper portfolio. Now, as copper's moving ahead, we're excited to have this whole portfolio from Riverside that didn't cost us anything from our own share structure to develop. And now we have 6 nice copper projects in that respect. In Ontario, we have a nice portfolio on 3 lead gold projects. Those gold projects are near where Ross Beatty and Equinox Gold is building the 4th largest open pit gold mine in all of Canada. Ontario produces 47% of all of the gold of Canada comes from just Ontario. So in that major jurisdiction, Ontario, Riverside has a portfolio of projects that we call Blue Jay, and it's a subsidiary of Riverside. So that's another thing we're working on now and working with partners on.
And a couple of times there's been spin-out opportunities for Riverside shareholders. Could you explain a little bit about what that is all about?
It's really cool. It's great for myself as being a big shareholder, almost owning 10% of Riverside myself. I'm delighted. And simply, Riverside has actually done a share split instead of a share consolidation. And so we actually separated the shares. And with the share split, we dividend or give the share split to our shareholders tied to another company. For example, Capitan Silver was one that we recently did, and it's done very well. Alberto Rosco is a good friend and a great CEO. He leads that company, and I get to be the chairman, which is a lot of fun to be the chairman of it. And that company has grown and expanded the resources at the project that it has. And for us as shareholders, we got shares of Capitan Silver for simply being a shareholder in Riverside. So a share split is the way we do that, and that would be a spin out. We've also done work, for example, with Faraday Copper, Arizona Metals, Silver Viper, and other companies as well. And we're working on that type of thing right now for Blue Jay to see how we can structure that for a win-win for shareholders. So shareholders do really well with Riverside, and we're delighted to be in a position today to be able to do something of that structure again.
And so just to run through that one more time, you've done a number of spin-outs. So basically, you're spinning out assets into a new company in exchange for shares. And if you're an existing shareholder of Riverside, you haven't necessarily had to pay any more for those shares. They're just dividended out to you. And so that would be an extra potential return by being a patient, steady shareholder of Riverside.
Exactly. So it's a really good way to go. You know, we have 40% of our shareholders are European-based shareholders in Switzerland and Belgium and Germany. And I think the Europeans definitely have seen that the patience have paid off, that Riverside has done well. We've had some really good runs to the upside. Right now, the prices are down in the commodities or in the companies, not in the commodities, but in the companies. And with the commodity prices going up, it really allows for a re-rating of companies. And so Riverside's set to do that again. Plus, potentially doing another spin out would be amazing. Anyway, Riverside's in a good position, having the projects. And yeah,
Great.
the shareholders have done well.
How many spin outs have you done in the last 17 years?
So Riverside has done 7 transactions that have been fundamental transaction forming new companies. In many cases, Riverside itself has kept those shares, not dividended the shares to the shareholders, but has also not gone back to the shareholders with dilution. So instead of that, we've been able to have good runs on our share price. 4 times over the last 15 years, we've had 5x runs to the upside. So that's really good, big runs. I think we're set up now for another good market and moving ahead. Don't know, but we've already started to see the stock starting to move and really able to do that. So that's a good position to be in, and we can do that. And on Capitan Silver, we chose to dividend those to the shareholders, and that was good. We could do that again. It's partly is the structure of the deal and also the market. In a good
Sure.
market that can soak up any selling that happens, it really works. But in a down market, it's better to hold those shares until it's an up market, as we did with Arizona Metals. And then Riverside was able to recover $8.5 million back to Riverside, which helped us go and not dilute this company and not dilute the shareholders. So we've been able to have such a few shares out after 17 years, which is largely unheard of unless you do it this way.
Yeah, that's very impressive. And um, maybe you could just, as soon as we're going to talk about that, just one more time, what's your current sort of cap structure?
Yeah, cap structure is really good. We have 75 million shares out with no warrants. We also have a very good cash position with $6 million. That's been income we've gotten largely from the selling of assets. For example, we sold a lead gold asset to Fresnillo Mining Company, the world's largest silver producer and Mexico's largest gold producer. We sold them the key claims for a gold project called Tajitos, which will become a future mine for Fresnillo, and Riverside owning those key central claims with a 2% net smelter royalty. So it's a really great deal for Riverside. It helped to unlock the value of the project for both us and for Fresnillo.
And so you don't have any warrants outstanding. That's great. Um, what's the, you mentioned insider ownership. Do you have any institutional ownership or any strategic investors that you're able to talk about?
We do. It's great. We actually have Adrian Day, who's a really good investor. We also have Rick Rule and the Sprott Group that's an investor. We also have about 12% or smaller institutions out of the United States. We have a very nice European shareholder base with 40% European shareholder base with funds out of Luxembourg as well as out of Geneva and Zurich and Belgium, all shareholders in that. So it's very good. So we really like having that international shareholder base. Many of those have bought in the market because Riverside generally doesn't do many financings. We actually have been able to try to grow the company through transactions. And if anything, we've sold our shares or created shares to buy assets, not to get capital. And we've tried to take the capital from our prospect generator model or from selling of projects and be able to get the capital. So we've not used our shares to get capital very much.
When was the last time that you had to do a financing?
Riverside's most significant financing recently was back in 2019. So it's been 5 years since our major financing. We've done small financing to get what's called flow-through funding, simply to keep the property in good standing. And we did that on a charity flow-through basis for $400,000 or $600,000, getting the shares to our European shareholder base with no warrant at 30% above the market. Again, that's simply because to get the government's tax credit, you do it. So we don't need to do the financing. 2019 was the last time we did a financing. And before that was back in 2017 and 2014. So we haven't had to do very much in the last 5 years.
Well, that's great. That's very unique. And you mentioned a few minutes ago how much cash you've got. So what was the last disclosure to cash position the company has?
The last disclosure in the cash position, in fact, I'm working on right now, will be the mid-year return. This would be $6.7 million is the disclosure. What I tell people is we have 6 million in the bank. I always like to underpromise, but if you look at our disclosure, some of our disclosure shows that we have as much as 7.3 million, but we say 6.7, and that's not shares. We actually are trying to not do mark to market. We're trying to not deal with the shares. We have shares of companies as well, and that would be on top of that another $500,000 or $1 million. But the real liquid shares, and so, you could look at it a mark to market price and see that it's 1.5 million. But since there isn't really a market for those, so when we're talking about our cash position, it's simply cash, not cash and shares.
Sure. Okay, great. Maybe we'll sort of wrap up here and appreciate the time that you spent with us and everything you've kind of gone over. What's a typical day look like for you?
Well, for me, it's early morning. I love East Coast time, so I start my day on East Coast time at 8 or 8:30 East Coast time with my first meetings. Then I finish my day on West Coast time or Pacific time. Therefore, I don't offend anyone, so I can do meetings at 8 or 8:30 or 9 o'clock East Coast time and cover things there. And then I do a little gym work or exercise, bike to work, something like that. Or then I'm always looking at rocks and paying attention to that, talk to some investors, and then kind of spend the day. And by the end of the day, I'm usually the last guy to leave the office at 6 or 6:30 Pacific time. And again, bike back home, get in some exercise and enjoy that. And then usually at home, work on the computer, reviewing my own personal stock investments and working with my part team, who are usually back from the field, and interacting with them. And we kind of usually wrap up with a call with my investor relations person at 9:30 at 10 at night. So it's a fun day.
It sounds like long days. Do you ever get a chance to get out to the field and look at rocks?
I do. I'm
Firsthand?
actually heading off tomorrow, so I really appreciate doing this today. I'll be on a plane tomorrow and I'll be gone for 2 weeks. Then I'll be back for a couple of
Nice.
days. But yeah, it's really good. I think it's so important to go out and be with the team, be on the rocks. I am a geologist, got my hand lens and rock hammer out there pounding, and have a lot of videos. Welcome anyone that wants to look at our social media. We have a lot of social media as well, of different videos of us out in the field, bulldozers and tractors and drilling and things like that. So it's good to be out in the field. I think it's really important.
Any advice for those that are looking to get into the industry, into either geology or capital markets?
I think one thing is to really study hard and to be calm. I think secondly is try to get out of debt. Try not to have a lot of personal debt so you can do things and do what you love to do. Geology is super fun. It's great to travel. I think it's really wonderful to try to take any opportunity you can to travel. Traveling is safe and adventures are fun. To be frugal, to be careful. I never fly business class, always fly coach class. Travel lightly. I just carry on, don't carry a suitcase or anything like that. And I always try to be very respectful, because you never know who you're going to meet again in the future, and they'll take you around and show things. So be inquisitive and listen, and learn, and it's a lot of fun.
Uh, any catalysts that investors should be looking for in the next sort of 6 months with Riverside?
Definitely. We're, on our website, which is rivres.com, rivres.com, we have the corporate presentation that shows the catalysts that are coming. We also have a video that I've provided about the catalysts that were coming. And we have 4 key catalysts. First off, a catalyst is with Fortuna Silver. Having a mid-tier, actively growing silver and gold producer drilling our Cecilia project where we're operating is really exciting, and that could be good. Second is on copper. Riverside has very good copper assets in Mexico, moving those ahead. We're in a copper market, very excited about copper and transactions. Third is Ontario. Ontario, Riverside has our subsidiary company called Blue Jay. We have 3 very good gold assets. The Pichette deposit and project is very exciting for us, catalyst for exploration there. And the fourth is on rare earth elements. Riverside has been diversifying the portfolio, staking and building out our rare earth element portfolio. And we're super excited about, for the next 6 months, results. Now that we're going into the summer, we're out in the field, and we're very excited to be able to bring those results back to the market.
Well, thank you. I really appreciate it. Any final thoughts before we wrap up here?
You're doing great, Keir. I really love the way you're simplifying. You're explaining things for your viewers. You have over 17,000 followers, which is
Yeah.
amazing. It's not easy to do that. It's quite admirable. You and I have known each other for over 15 years, and you've really worked so hard to keep communicating and finding investors. It's really great. It's super that you're doing this, and the other efforts that you do is really great. It's a real contribution, Keir.
Well, thank you. I appreciate it. And I really appreciate you coming on. Hopefully, we can have you back and we can talk some more geology. There was a few other subjects that, as you were explaining, I'm like, oh darn, forgot to ask about this and that. So perhaps after you come back in a few weeks, we can get you back on and do a little bit more, because it's a literal minefield out there for investors if they're not having anybody technical that they can go to, and they're trying to interpret some of this for themselves. It's best to sort of best when they can to have as much of a intimate sort of understanding firsthand as possible, because we know there's some snake oil salesmen out there.
No, it's great. So seeing people in the field is really important, and I'm off to the field tomorrow, so that's great. And I think, yeah, investing with people that are on the rocks in the field really will help you. Good idea.
Excellent. Hey, thanks so much. Have a great day. Thanks, John-Mark.
Thank you, Keir. Take care.